Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And we're looking at a beautiful San Franciscan landscape here. You know, our thoughts and prayers are with everybody up there in Northern California. So I thought I'd, show everybody a little bit of the beauty that is of Northern California. And joining me today for this esteemed panel where we have a very interesting topic is three gentlemen who have been on here before, but have a lot more to say. Thankfully, keeps me in business. So with that, I'm going to go, I guess, I can't even tell. I think this is counterclockwise. Okay. We got Jason Hirschman, private investor, Hudson 215 Capital, at A-Track. He's a man of many titles and also apparently a Golden Knights fan.
Well, I mean, here in Las Vegas, right? We beat Chicago. We're moving on to the next round. It's nice to have sports back. We need something positive in this city. I mean, we got the heat and the unemployment, so we need something positive.
That's for sure. Well, hey, I wish them the best. My team's out, so go Knights. Screw it. I don't even care. So next up, we got Mark Tobin from Coffee MicroCaps. Mark, what's going on? How early in the morning is it for you right now? I always know that this is you coming on as a labor of love, so I do appreciate it.
Yeah, no, it's 10:30 at night, so it's not not too bad. Yeah, we're all good here. The government lifted the alcohol ban midnight on Tuesday, so that's something to celebrate.
Oh, that's like yes, it's about time. Oh my gosh. No, you don't have to go into your secret stash anymore. You know, that one stash underneath the cupboard right there, right?
Yeah, I know, exactly. The secret stash, though, was like drinking stuff that like my mother gave me like 10 years ago that has never been opened. And I was thinking, yeah, that's the kind of booze I was starting to consider drinking.
Brandy from 1975, yeah.
Oh, man. That's too funny. All right. Well, then, I appreciate you joining us today. And then, of course, Stephen Kiel. We're still deciding whether to officially make him a producer of the show. You know, we're just going by just show appearance count at this point. That's how you climb the ladder of producer, associate to executive producer. But Stephen Kiel from Arquitos Capital. What's up, Stephen? How you doing, man?
Good to see you. Good to see all of you. So I think after 5 appearances, you get an ownership stake, right? So we're going to have to start bringing advertising here. Maybe we could have, I don't know, in meeting advertising, placement. We'll get a Coca-Cola or something like that, or some sort of brand advertising. So Mark, you can bring in, bring a great brand of coffee or something.
I love that idea. I think that's actually where we are taking this. And you know, instead of having a topic today, let's just have our own, a panel board meeting, to talk about how we're going to properly monetize this so that everybody gets a piece of the pie. So everybody has to come in with something that they're pitching. All right. So it could be
it's Bobby, it's your barber. Your barber, if you could share his name, I mean, that would be probably a very attractive sponsor.
Oh, he'd be stoked for sure. That's for damn sure. All right, guys, to topics today, or to the main topic today. I think we had a lot of fun last week, just kind of covering the one topic on directorship and what it means to be a MicroCap director on a board of directors. I think today, Mark actually, he'd been wanting to talk about this topic a few sessions ago. We didn't get to it because there's just so many things going on, so many topics. But today, we're going to be talking about insider ownership. That's the main thing that we're going to be going on. So I'm going to throw it to Mark first, since he was the one that brought this up and wanted to talk about this for this panel. Mark, take it away, man. What fascinates you? What do you want to know? What should we discuss about insider ownership today?
Yeah, I mean, obviously insider ownership comes up a lot more in the microcap space because you have, founders bringing through business from the private sector to the public markets. I mean, you don't really get it in large caps unless you're somebody like Steve Jobs, I guess. But in Australia, I find a lot of them microcap fund managers and small cap fund managers, like it's kind of part of their like marketing, I don't know, spiel that they give all the time in interviews. What are we looking for in companies? We're looking for insider ownership, like where we're like aligned with the management teams of this company. And it's that, look, I'll be the first to say better to have alignment than not, but I also think like having high levels of insider ownership can actually be a deterrent sometimes. Like I find it, you know, you need to find a happy medium where yes, management and the board are aligned, but not where they're so entrenched that, you know, they think they know everything and they're not open to outside suggestions from their own shareholders, or they're doing stuff that's in their best interests, but not maybe necessarily in the best interests of shareholders, either in the short term or the long term. And I mean, I don't know if Stephen and Jason know, but I live here in South Africa, and you know, insider ownership is absolutely never mentioned here by the fund management community. I mean, it's a very small listed environment. Look, you got about 350 stocks on the Johannesburg Stock Exchange. Australia is like well over 2,000. So, you know, it's a completely different opportunity set. But, you know, comparing the marketing of even the managers that look at small caps, South Africa don't mention insider ownership at all. It's like it's a total non-event here. So I'd be interested to hear, you know, from the kind of US perspective, and I guess Jason and Stephen's own experiences with insider ownership. Like, you know, when is it? I guess my kind of question would be, when is insider ownership bad?
Yeah, and I mean that's an excellent question, and something to think through when you think of being a minority owner, because we're passive owners, right? Unless we have such a large stake or an active, some sort of active participation at the director level, we're riding along with what management and the board is doing. We may have no ability to change the board. And if we do have an ability, it would be, you know, sometimes it's just way too much, just way too much work and way too much pain to even attempt it. So, you know, the best investments in the world are ones where we can just hop on the coattails and they're already doing well. We love what management's doing. We love what the board is doing, and we're just here to cheer them on. Those would be the best investments. If you get into a situation though, where there's a control position from another, whether it's a manager, whether a founder, director, whatever the case may be, outside investor, and it's to the degree that they don't want to interact with you in any way, provided that you're giving constructive feedback or constructive conversation or just information gathering. If they don't want to participate because they don't have to, because of that large stake. I mean, if management doesn't want to participate because of a large stake where they view you as someone who's unimportant as an investor, that could be a problem. It's not a problem if you agree with everything everything the company is doing, and you just want to, you know, give them a high five every once in a while. That's not a problem, but those are ideal situations that are relatively rare. And especially early on the idea sourcing and discovery period, we're actually trying to learn about the company. If they don't engage with you, that really does make it difficult. And obviously, if there's a large stake out there held by a director, founder, or whatever the case may be, and that's the reason they don't engage with you, that's when it becomes a negative.
Yeah, I mean, I would add that, you know, insider ownership, I think it's one of those topics, and that's kind of like baseball, motherhood, apple pie, right? I mean, on the surface, no one's ever going to argue against them, but when you dig down into it, it's not as great as everyone just thinks. I mean, sometimes you have to look, particularly in the microcaps, right? You have a large, usually a founder or someone else who's a large owner, and you know, maybe paying themselves way too much to treat the company like a piggy bank. And there's really no effective way to change their behavior. And it's very frustrating that as an investor, right? I mean, what do you do with companies like that? A lot of times the thing just to do is just to stay away from it, despite it, you know, supposedly theoretically being aligned. But basically, a lot of times you have when you're aligned, it's actually a management team who's lining their own pockets, right? So it's not the kind of lining you want, which can be very frustrating.
It's tough. I mean, without naming any names, there have certainly been some private equity guys who've taken over some public companies that have no regard at all. And these are larger companies as well. They have no regard at all for any of those minority shareholders. And, you know, that's tough because, I mean, for me, honestly, it's best to just stay away in those situations. You want, in an ideal world, to have insider ownership, to have that alignment. But in the case, when as Mark has indicated, in the cases where there's not that alignment because they just don't want you to be there, they don't want any other investors. I think we could probably say someone like Michael Dell, right, over and over again. He just doesn't want the other investor. He's using you for, using the passive and outside minority shareholders for his own benefit. And we saw several transactions through the years. I'll mention him just because that was, it was a very large example, and I don't think we're going to get sued or anything about that. But going private, coming back public, using the tracker stock, et cetera, et cetera, et cetera. Several promises along the way that were all broken, in my opinion, that were all broken. How do you invest alongside someone that there's not alignment in that case, even though he's a large shareholder?
Yeah, I mean, I don't know if it's a phrase in the US, but it's definitely a phrase in Australia, and you tend to find it in the microcap space. They're like a private company that just happens to be public. It's the shareholder or the board and the management are kind of running this business. Sometimes it can be a lifestyle business, as Jason says. They're, whether it's high salaries or high directors' fees or whatever, they're managing their remuneration to the benefit of themselves from probably an end tax point of view. Generally, that doesn't result in like kind of dividends coming back to shareholders. And I mean, in terms of optimum levels, it's something I've tried to observe over the last year. It's something I've been thinking a lot about in the last year, and I've kind of formed a heuristic with no kind of empirical evidence, but I kind of find through kind of performance of the companies that are going, if you have an insider ownership, I would say above 15%, but kind of below 35%, I have found anyway in my own personal experience that that's kind of the sweet spot. Less than that, and management they're definitely still in there, but I don't think it's a large enough kind of weight. Sometimes the value of their stock holding is actually less than what they're getting paid as like the CEOs at that kind of below 15 level. And above 35, then they start treating it like as it's their own company. Now, if they are the founder, I mean, it essentially is their own company. But above 35, where you've got, maybe the chairman, the CEO, one or two others, it's quite tightly held in amongst 4 or 5 of them, and they own 65, 70%. Then it's just like, we're the kind of brains trust, and you guys, you can sit here on the sidelines and, but we're really not going to pay any attention to any suggestions you get. So for me, I don't know, 15 to 35 just seems to be the sweet spot. And I'm not sure if you think back on some of the investments you guys have made, down through the years, I'm not sure if the kind of insider ownership fell into that sweet spot or not.
Jason?
Yeah, I mean, theoretically, I agree with you, Mark. You always want you want to be able to still have some kind of outsider shareholder, some pressure, some oversight, right? Not on the other hand, you still want the management team to have enough skin in the game, right, to really make a difference. Whether it's above a certain level or below a certain level, a notch, 35, 45, 25. It doesn't really make a difference. I mean, just to be honest with you, let me just take a specific example, and I'll mention the company that I own, right? I mean, a big position of mine is this company, Expel. It's been a great microcap run stock. It's, in the United States.
Whatever the adjective, better than great, is what it is. That is an incredible, congratulations on that, by the way.
Oh, yeah.
Incredible investment.
Right.
And absolutely, congratulations.
The thing is about that, I mean, we have like a CEO who's a fairly young guy at the time when he actually bought shares, right? Probably owned about 5% or a little bit more than that, 5% of the company. And you have a number of directors who really own, close to, like 35, 40% of the company, something like that, right? So, I mean, they're in that spot where they're so close to being 50%. We really don't have to take that much outsider guidance. On the other hand, they're doing a bang up job, right? So you can't really, I mean, these are important like guidelines, but they're not like hard and fast. Like, I think, 0-1 rules.
I'm not saying it is a hard and fast rule, but yeah, it's just a heuristic. I said is from what I found over the last year.
Yeah. So what do you do, Mark? Like, not only is insider like ownership, but sometimes you see like insider transactions, right? I'll go back to Expel, right? Some directors now are selling shares. They haven't sold shares in quantity for years. So how do you? I mean, it's a corollary to like insider ownership, right? Whether they become bigger owners or shrink their position. How do you think about how those moves from directors and managers?
Yeah, it's a tough one. It really is a tough one because in Australia they're viewed very badly. Like selling by insiders, is viewed very badly by the market. They think that obviously the management team know more than the shareholder, and they're selling ahead of some bad news. And I think empirical evidence, even in academic circles, would say insider selling is generally a negative kind of signal to the market, and holds true in terms.
Always?
Yeah, you see, this is. I don't think always. I think if you have, I often say this to microcap companies that have large insider ownership stakes. Would you rather own 50% of a $20 million, market cap company, or would you rather own 10% of a $200 million market cap company? And, sometimes you just need to get that liquidity into the market to kind of get, things trading, the volume attracts more people, it becomes like a virtuous circle. Actually, the high level of insider ownership is actually holding back people entering because, the slightly institutional guys, they can't get set. It's too illiquid for them, but it can like bring them on a bit if you like let go of some of the stock. And I think if it's well managed, well communicated, I think it can work well. I mean, on balance, fund managers, institutional guys in Australia anyway, don't like to see insiders selling, but in some cases I think it can actually help the stock. And selling down by insiders is not the only mechanism to improve liquidity. I mean, one of the companies that's done really well in Australia over the last couple of years, they've been like dividend paying, but they've gotten their dividend reinvestment plan underwritten. So for the people who take up cash, that gets underwritten by a broker. It goes out in a line maybe to an institutional guy just to kind of get him set, or to some other retail guys who want to increase their exposure. And over the last 3 or 4 years, they've grown the share count on issue and improved the liquidity without any of the kind of major shareholders and stuff having to sell down to increase the liquidity. It's a much more long-term strategy, but it's turned out to be a very successful strategy.
I take a really completely qualitative approach on this. I think to Mark's earlier point about what level would be ideal empirically, great for a screening mechanism to try to find out which pool you're going to fish in, for sure. But then, all the work and all the fun is looking at each individual company and trying to make a judgment and determination of that decision maker and of that insider owner and of that management team. And sometimes it's an activist investor or something like that, or a director that kind of controls the situation, may or may not even be the chairman, but that's the person who has the large insider ownership. And same thing with buying and selling. Some directors and some managers seem to always time the market well on both buys and sells. And we don't, especially in microcap, small cap land, we don't always have the luxury of a 10 or 15 year period to look back on to determine that. But there are certain situations where you can see that, and it goes back 20 years. You think like a John Malone or something like that, buying into something at a particular time. Not so much an indicator right now, but 10 years ago, it really was. And if you can find just a couple investors who are also involved in management or as directors, they're great to follow. And you can trade in and out in some of those stocks or increase or decrease your positions based on that. But for the most part, it's a tough go to determine it. And, you are, even on qualitative things here, you're making decisions on the edges, and you're trying to do the best you can with the information you've given. And you have to remember with some of these small caps and micro caps, not to say that Mark was specifically talking about that, but sometimes these directors, these are not independently wealthy people. That stock ownership might make up a real significant part of their net worth, and they have day-to-day bills. They've got kids to put through college, they've got houses to buy, new house to buy or something along those lines. And, sometimes selling down a position is nothing more than that. What's that, Mark?
Divorces to fund. That's a common one in Australia, seemingly.
Yeah, but sometimes you can find that information out, and that's the kind of the qualitative approach where there's some digging you can do, and call the person up. Sometimes they take the call and they'll just tell you. Doesn't mean you have to believe what they say. Always take that with a grain of salt, but it doesn't hurt to ask. I mean, that's our job. We're detectives, right?
Yeah, I think you're right. I mean, I've known, companies where there was an insider selling and at first you would think, oh my God, why are they selling? It wasn't even a big amount, right? But you find out like they're not independently wealthy, and this is their opportunity to go on vacation abroad, right? And they need a little bit of cash. And I think as investors, we're always like, well, they should be saving 25% of their salary and therefore not have to sell any shares, blah, blah, blah. But, in the real world, one reason why people invest or have shares is to liquidate them and do things, have certain experiences in life, right? Like traveling with your family. So I think it's it's especially in the microcap world, it's so qualitatively driven, right? That you really, it's better to, like you said, call up and get the answer. Now, one thing I really dislike is like seeing like a number of directors, like a director who's like on director of 4 or 5 companies, particularly in the microcap world, right? And like always dating on like every company he's on, like pretty much boom, whenever those shares vest, options vest, that really annoys the hell out of me. And really sort of, for better or for worse, it infects what I think about the company.
Let me ask you something, Jason, real quick. You mentioned Expel. Don't give the price, but what was the time period where you first made your first purchase of Expel?
I was hoping to save this for in the market trenches, but okay, Jason.
No, just don't go into detail. I
won't go into detail, but honestly,
IPO, I think.
2 years, 3 years.
I mean, I let's just say this: I had 2,000 shares in like the end of December 2015, like when they got sued, and then obviously a lot more now.
Let me
the average price. I gotta tell you, the average price is $1.24.
Yeah. So the reason I don't necessarily need to know, your new financial net worth from this position, but the point I wanted to make was, look, maybe Jason wants to go buy a yacht, right? He wants to take some of his Expel winnings off the table and go buy $100 million yacht or something like that now, because it's been such a great, obviously exaggerated thing, but this is what happens when you have a company that was a manager, a founder, they busted their asses for 30 years and, they sell some of their shares because now they can't take it, to the grave, right?
No, I think you're exactly right. I mean, and I'll be like very specific. I mean, it's always been, I only have like one house. It's the same house I've lived in since 2000, right?
You just continue to build upon it as the.
That's right. It's 20 stories high now. No, but it's always been a sort of a, my wife and I have always bounced off getting another apartment someplace else, or a couple of or summer place. At some point you say it's not just about my dream; it's about my spouse's dream too, right? So you have people who are directors and managers. I mean, they're married. If they want to stay married and not have to liquidate for divorce, they got to consider their spouse's thoughts and desires too.
So you could see, I mean, and this is a perfect example of that. To kind of what Mark said, that look, Jason might sell some of his holdings, right, to live life for a bit. You can't compound. It's great to compound it for 100 years, but enjoy life a bit, right? At some point. That doesn't have anything to do with what the future of XPEL means. I mean, if he sells a few shares to buy a condo to, one day we'll be able to travel again, and him and his wife can, go overseas and live in a condo in Costa Rica or something like that. As an outside investor, I'm not an investor, but if I was looking then at XPEL and saying, well, Jason, he knows the company better than anyone else. He's been involved for a long time. He's done really well with it. He's sold some shares. If somehow that becomes common knowledge in the public space, what am I supposed to do as kind of outside passive shareholder who's looking to Jason, right? I mean, this doesn't really mean about the company.
Yeah, I think this comes back. Sorry, just to come back on Stephen's point, about the qualitative and like doing a bit of research. I think how they got the insider ownership is like an important thing to try and figure out. Is it, as you say, a 30-year founder where like his insider ownership is sweat equity that he's like built up like from the ground up when he like started the business or she started the business, or have the new CEO come in and bought shares on market since he became CEO, let's say 7-8 years ago. He's continually buying his stock on market, or is it options at like ridiculously low strike prices that they got as part of their incentive package, or what? So I think understanding where their insider ownership came from is also another like I guess bit of research that not a lot of people do to figure out like, well, how did they get to the because some CEOs actually become one of the largest shareholders from ridiculously like structured incentive programs, and 5 years down the line suddenly they're like the third biggest shareholder, and when they came into the business day one they had nothing, and they could be not performing that great. Now the board are kind of stuck with this guy, and I don't know about Jason buying a yacht for use in the middle of the desert. It definitely doesn't something like you would spend a lot of money.
There's some great lakes. There are some great lakes nearby. So to Jason,
there's a big swimming pool in front of the Bellagio that I could just put in.
But this yacht's going to be bigger than that for sure. And just remember where he came from, Jason. It's great to be such close friends with you through the years, and I appreciate
okay. That's the problem with living in Vegas. Thank God for COVID-19, because you could imagine how many drinks I'd have to buy people just coming into town if not for COVID-19 right now. So just joking.
Remember the thing about yachts, it's always better to know somebody who has one than own one yourself.
It's true.
Which is why we're all now Jason's best friend for the
Wait, I can already see.
What would be the name?
Bobby?
Yeah, right. Hold on, Jason. This is an important topic. What would be the name of the, like, if you were to actually get that yacht? Would it be I think it would.
I don't honestly. Jackie Mason, there's an old Jewish comedian named Jackie Mason, right? And he always said there's no bigger schmuck than a Jew with a boat. And I think I would qualify as that. We're desert people, right? I'm not water people.
This is true. I live in a valley, so okay, that's close.
That's right. No, someday you may see me in a Porsche, but that's a land vehicle.
Are you not a contrarian? Do you describe yourself as a contrarian investor? Just on this one issue in life, you could be a little contrarian as well. We'd support that. But no, I mean, look, to this topic, it's a great topic because you do want insider ownership, you do want alignment, and the goal for us as outside investors and passive investors is to see, just because there is insider ownership does not mean ergo, there is alignment. And the fun part of the research is determining if there is, and not outsourcing our commitment or due diligence to an insider who we happen to, respect or something like that. That's step one in the decision-making process, or maybe the idea sourcing process. And then there's steps 2 through 10 to determine if we actually like the company, if we like it at this price point, if we can build the commitment to own it over the long term. And so that alignment is, depending on, for me, it's kind of a necessity. It's not in 100% of the cases, but it's something I really, really want to have in investments, and to the line of necessity. But there are a lot of companies out there that have insider ownership that I want no piece of.
Let me ask you a question to you guys. When you talk to like managers who don't own a lot of shares, and you ask them, what stops you from maybe going into the market, buying some shares, or building an ownership position? What are some of the answers you get? Because there's 62,000 excuses they seem to have, right? I mean, why they, anything from their kids' college education fund or to that recent sixth divorce. There just always seems to be a reason why some guys just don't own enough shares.
Yeah, I can take it. I mean, when I'm at AGMs, not so much the CEOs, I generally find they have it because they've got it through their incentive package or something. But I call out directors at AGMs if they don't own shares. And you do get that. Some of the, I guess, newer ones, maybe, but you do get directors who don't own shares. I mean, I call them out. I say, you're a director of this company, but you don't own any shareholders. Like, why is that? And specifically put them on the spot. I would say in Australia, it's very rare that the CEO wouldn't have a shareholding in the company. Now, whether that's through them being a founder, through them getting it through an incentive package, or they've bought on market at various times in the past, I would say it's very, very rare in the microcap space in Australia not the CEO not to be a shareholder. How big now is a different question. But sometimes you'll find directors that are in there that don't have a shareholding, and I constantly call them out at AGMs of why they don't. And a lot of the excuses are the exact ones that Jason just said. They parrot off something about, they're going to do something, or they've recently had a divorce, or yada, whatever it is. But,
the best answers are the honest ones. I mean, sometimes these guys and women, they don't realize they're not sophisticated. They're not really outside investors in other companies. They're not, I would not call them quote unquote investors, so to speak. And they'll just tell you, well, look, I'm getting board fees. I don't need to buy anything in addition to that, or, whether it's cash or whether it's shares, I'm getting shares for the board fees. I don't need to buy anything else. And say, well, I mean, why did you come onto the board then? And, sometimes they'll say, well, I mean, I was friends with the CEO. Why to be onto the board? It's like, okay. These are like politicians that are way too honest, Yeah. But, some of the funny ones are things like that. And then the CEO too, he'll say, well, I'm not getting paid enough. And so I don't have enough excess funds to go out and buy shares as well. And sometimes I've had a director say, well, I don't know that I really understand the company well enough to. It's like, well, you're the audit chair. What are you talking about? So the best answers are the honest ones. And think about the most outrageous, honest answers you can get. I've gotten some of those asking, because, just like Mark, that's one of my favorite questions. You call up one of the directors, especially the lead director or chairman or kind of senior management, and forget about, this is the next step of it. The CEOs, especially for smaller companies, they have come up generally as salesmen. And so it's really difficult to tie them down to something, because they have a lot of enthusiasm. They've got a lot of great content and things like that about the company itself. And they always have a reason. They always have an answer. The ones to talk to, though, are more of the COO and the CFO. And that's where I actually like looking for insider ownership and purchases as well, because typically those people, obviously not across the board, because some CEOs are great, but typically the COO and the CFO, they know what's going on day to day. They know everything. They're not salesman type people. On the COO on the operational side, the CFO on the financial side. And if they're making acquisitions and it seems from your own research that the company's reasonably priced, or maybe longer term margins are increasing, revenues increasing, you think there's a beginning of a long runway there, and the CFO then goes out and buys some shares. That's really interesting. And sometimes those people will give pretty honest answers to you as well. They don't sugarcoat it like a CEO might.
I'll just add that I think, Stephen, you're exactly on the right pathway, in the sense that I think CFOs in some ways are the better tell than the CEO in terms of insider trading and transactions, because everybody's watching the CEO's actions. Not as many people watch the CFO if he sells a little bit. And the CFOs, in some ways, they're much more numbers people, right? Honestly, sometimes they have a little better savings ethic than some of these salespeople, CEOs. And it's really interesting when they buy. And it's still somewhat interesting when they sell. I mean, obviously, there's a good number of reasons why people can legitimately sell. Usually, there's one good reason why people buy, though, right? You know, they want to make some money. It's except for the token buys and some
good reason. One good reason. There's a bad reason too, is that they want to manipulate the share price. There's usually a history to that you can see, though, and it's sometimes, you know, if there's not a history of kind of these buying and selling, then that's probably not a company that you want to rely on the buying or selling from those individuals. But oftentimes there is a history.
Right. Yeah. Hey, Mark,
sorry,
real quick.
Bobby, go ahead.
I have one quick question to ask. You know, when, let's say you see a director or CEO go in and they buy, right? Because I think more or less what I'm hearing is when you see a sell, you know, you kind of can think to you can come up with excuses, whether it's a big amount, a small amount, kind of like, all right, let's try and understand this better. But the thing that I always find interesting is when you see a buy, but it's not a significant buy. You know, it's like $2,000, like it's you know, pittance when you compare it to what they're you know, whether the CEO or director, what they're making from a cash perspective on my baby's going nuts right now. And you know, it's almost like pittance compared to what they're making from an annual salary. So, I mean, what do you guys think about that when you go and see, like, you know, kind of it's like a buy, you know, it's like not, you know, it's not much, but it's almost like they're kind of like, oh, look, I did a buy, you know, like, what do you guys think about that?
I love the sound effects, by the way. I think we should add more sound effects.
I'm having a baby.
Yeah, right.
You know, one thing I think that, and it's not just in terms of insider buys or sells, and I can't do the sound effects properly, but, you know, these managers aren't, right? They know what outside investors want to see, right? And so, you know, some of them are more than willing, because they know it's like people use it as a device, right? To make these little buys, you know, in the market, right? You know, hopefully because they want their stock price to go up for whatever reason. Maybe they have to do a secondary or something like that. So I think you have to be, particularly if you're seeing like buys with a crappy balance sheet, you should be a little anxious, do a little extra homework.
I think on those small buys, I agree with Jason. It's usually, to me, it's like not a red flag, but it's like, you know, volumes are a little low. You know, we need to get like kind of volume up. Maybe they're getting close to some index inclusion, or, you know, they want to, you know, get the price up a bit because they're thinking about doing, you know, a secondary offering for whatever reason. And, you know, the fact that they even buy, you know, generates news flow, like, you know, shows up on everybody's screen, and, you know, it gets the name of the company in front of people. Let's be honest, you know, it comes up on people's screens. So yeah, the small ones, as you say, if they're like $2,000 here or there, considering the CEO is like, you know, taking home like $250,000 a year, it's like, to me, it's a not a red flag. I don't know. Can we downgrade from a red flag? A baby red flag, maybe.
Like an orange.
What?
An
Yeah.
orange, yeah.
You know what? To that manipulation point, think of, again, allegedly, but think of Tesla and Elon Musk, right? Elon Musk made all of those insider purchases. In certain people's opinions, they were manipulative or attempted to be manipulative, but if we would have followed it in, we would have made a lot of money.
Well, there's always the exception to the rule, for sure.
So maybe we have to find really good manipulators and ride along. I mean, this is not a fundamental analysis or anything like that. It's not anything that we do, but this is a different world. It's 2020. The world is turned totally upside down. Fundamental analysis is much less important for this short-term time period, I think, than in the past, where you have the market rewarding people who some people think allegedly is manipulating their stock with those insider buys. And they're still working out pretty darn well for those, let's call them traders, not investors.
I mean, just going back to AGMs as well, another question I love to ask is to the directors is how they actually came up with some of the like prices that these stock options and warrants and whatever are set at. And you should see the look of fear on their face when they have to try and explain the mathematical formula and valuation of like how they actually came to that number. And it's a really great question to understand, like how rigorously the board has even thought about the CEO's package.
Yeah.
Because one of the last AGMs I was at last year, the CEO, I won't name the company, the CEO, through her husband, her family, whatever, she owns about 56% of the company now, and she's getting paid the CEO, sorry, and she's getting this huge, in my mind anyway, like free option issues on top of it to like incentivize her. I'm like, she's the CEO, she owns 56% of the company. How much more incentivization does she need to like to make the company? And like the stock was trading, like I think it was, call it like, well, I'm going to divide now from, but let's say it was like $1.20, and like the strike price and the options was like 10 cents. It was like the minute she got them, they were like in the money. And I put it to the like lead director, just walk me through like the conversations and the mathematical kind of formulation of how you arrived at this like strike price, and like why does the CEO need more incentivization considering she owns 56% of the company?
Yeah. Well, sometimes those are great conversations, because then you can know that's not a company I want to be involved in. What you want is the extremes. Those that are extremely and egregiously bad, good to know, because you don't want them to hide it. And then you say, well, I want no part of that. Those that are egregiously good in some way, where they don't give themselves, like, if that CEO owns 56% of the company, doesn't pay a salary, doesn't get any options, nothing. Okay, good. That's really a nice one to look at on the other direction. Somewhere in the middle is where it gets tough, though. And oftentimes the answer you'll get is, well, we hired a consultant, and the consultant advised us to do this, and plausible deniability. And there's no additional explanation required, from the perspective of the director that you're asking that.
Mark, let me ask you a question. I mean, those are that's a pretty egregious here. I mean, why even go to that? I mean, are you thinking of like shorting that company? Because how would you even get to the point where you say, I want to go long with these people, unless you're just looking for a trade? I'm just wondering, like, how do you use that information for anything how do you monetize it, really?
Yeah, I think, the company is actually performing pretty well, to be fair. So this is like the tricky one for me, is like, on an ethical basis, like, I'm in like complete disagreement with what they're doing, but on a performance basis, they're delivering. Their profits are up, revenue is up. The company is doing well, but to me, that ethical kind of bad behavior is going to manifest itself somewhere else at some point. If they're willing to do that at that level, I'm sure somewhere operationally down below, it's like going to kick in, and that could be in 6 months' time, that could be in 6 years' time, and you might have missed out on a great trade.
Do you own shares? Do you own shares then, and just use that to size your position, or do you just in essence, just a curiosity kind of potential car weaving in and around, right? And 3 cars ahead of you, you just think, what? I think that guy's going to crash. You sort of watch them rather than watching your own path when they're driving down the road.
It's more, it's definitely more for like sizing the position, because I just think like if you've got that ethics at the top, that has to permeate down through the business. All culture comes from the top, and it's more about sizing a position. And sometimes it's like, actually, I don't want to be here at all, and it's probably going to do like a great run, and maybe nothing will ever come of it, but it's more. And I think if I was a shareholder before this kind of package came out for the CEO, she renegotiated her contract or whatever, so I was already in there anyway, so it was kind of like, I'm going to call you out, like this is not the normal kind of standard corporate governance. And, somebody has to call it out. And, the AGM is like, for a very small retail, shareholder, the AGM is your only opportunity Definitely get any FaceTime with the directors, independent in name, I would say in this case only. And that was kind of my motivation behind it.
Have they made any change? Are they continuing to do what they're doing? Okay.
This is my whole topic of insider ownership. So I said, I've been thinking about this for the last year. It was a result of this AGM last year that has now, I don't dwell on it all the time, but it definitely caused me to reappraise the whole, rule of thumb that insider ownership and alignment is good, without, kind of critically thinking, analyzing it in the back. And as Stephen says, hey, look, microcap investing, all investing is all different shades of gray. You're never going to find something that's going to tick every single box on your checklist, or the perfect investment, trading LP of 3. So you just, it's what you can live with and what you can't live with, I guess.
I mean, it's a stock appreciation. Oh, sorry.
No, see, it seems to me, I'm just a throwaway line, but it seems to me like you spend a lot of time going to AGM talking about the size of CEOs' packages, which is it's a weird way of phrasing it perhaps, but it seems like, but one other thing, it's just a corollary.
That was a Perry Mason joke.
Yeah, I know. Sorry, the quality joke. But when you do it at the AGM, I think there is a lot of things to be said for talking to directors, right? And you do get a lot of information, but it's not talking about inside transactions, but just about the business themselves. Sometimes that the CEOs aren't even willing to talk to. They're a little bit more used to shareholders, right? That sometimes talking to these other individuals, sometimes it's a little bit more revealing, I find.
Yeah, I mean, I find AGMs very useful. I mean, I wouldn't say I have a big portfolio. I'm not attending like 60, 70 of them a year. But I find them like very useful. Talking to other investors that are already invested in the company, their kind of feelings on a research that they've done. It's actually a good way to meet other investors who are invested in the stock with you. And you can kind of bounce, announcements that come out from the company off each other, or they've spoken to somebody, they've got an industry contact who's, feeding back information that's, it's not market or inside information, but it's, relative industry information. And talking to directors as well, I find they can, give, it's like Stephen says, getting away from the CEO marketing sales pitch, they can give you a different context to the kind of numbers that you're seeing coming through, or how the operations work. It's a different insight that's generally, I find, in the rest of the year. It's a very hard insight to get, because you can't call up the IR department if they have one, or if they've got an hired IR consultant, say, I'd like to speak to the director who's, head of the audit committee, or I'd like to speak to the chairman, who's like a non-executive chairman. You just don't get that interaction as an investor throughout the year. Whereas at the AGM, it's like your one chance to talk to people from inside the company that you normally never get to talk to.
All right. You guys, Stephen, let me just throw a question to you, Ash. When you these management teams that have low insider ownership, that particular management team, that set of directors, do you ever see, it seems so rare that they actually find financial Jesus and go a completely different, direction, right? It just doesn't happen, right? Once they go down a certain, high competition, low ownership road, that's the way they're replaced or acquired, right?
The culture. Yeah, that's the culture they've created at the top, and it trickles down. And I do think it has a negative effect all the way down to the first line worker who doesn't feel an ownership in the work that they do day to day, because their boss doesn't feel that, their boss doesn't feel that, the next boss as a CEO doesn't feel that, their boss is the chairman of the board, they don't feel that way. So it's a negative culture thing, top down all the way. And I just generally would avoid the situation there. It's too much. It doesn't mean it might not be a great investment. That's one thing or another over short time periods. But is that a company you want to ride with for 10, 15, 20 years? Is that a company that you can build a commitment to own when the stock drops by 50%? It's tough to do.
Yeah.
I generally avoid them.
Yeah.
Sorry. I think, yeah. And I mean, the other thing on insider ownership, I guess, is, eventually it does, I find, tend to resolve itself some way, somehow. So you'll have the founder will retire and they'll like decide to sell out, as Stephen said, spend 30 years. Now they're going to exit, put the remaining shareholding in some kind of like family trust and, go on the board and just kind of keep a kind of family stewardship thing of the business in there. But, by and large, they're, nowhere near as big as they once were. Or, they do very rarely have a come to Jesus moment where they're like, our stock price is like incredibly low compared to our peers, and they go through a rocky patch and they like have to raise equity, and they like COVID now is a classic example. Now you've got some companies who've fallen from a 25p to a 15. Well, if you were already at 10, you're probably gone to 5, and now you've got to raise money, and like now it's resolved itself because you're raising at such low prices. So I generally find there is something that'll kind of force the hand eventually. Or Stephen says, that some like private equity guys will get a stake in there, and through, activist work, they can manipulate their shareholding with, getting people on boards or calling EGMs to roll boards or roll CEOs or whatever. But, I find it generally does resolve itself, but the time period can be very long.
I think that I don't know. Does anybody have any final thoughts on this? Because otherwise, I think that was a pretty good way to end it. What do you think?
Yeah, that's great. So insider ownership, good, not always good.
Yeah, did we answer the question, Mark? I don't know if we were very helpful today. Well, definitely not me, but I don't know.
Yeah, I think the best answer I think came from Stephen. If I'm honest, is you can screen for it, but then you got to dig a bit deeper. I think you got to investigate what is the insider ownership's, I guess, behavior. They have this 40% stake, and how do they view minority shareholders? Are they there for the good of all shareholders, or are they there for the good of themselves? So I think it's a useful thing to screen for definitely, but I think that should be a jumping off point to like further research then with back into that to see is it somewhere you want to be, is this insider ownership you want to be aligned to.
Yeah, I mean, ironically enough, sometimes it's like a support pet in some ways, like like a high insider owner. If you have like your own stake and it's a important position, insiders hold on to their stakes, help hold on to yours, even if you shouldn't. Somehow it just helps out a little bit. So in some ways, it's kind of like a little bit of emotional support. It keeps you when it's thundering and raining in a bad storm, it keeps you calm. So anyways, it's a great thing just that.
Jason, I think you've just you should write a book now or an article immediately. You've uncovered another bias for investors to try and guard against. So we've got recency bias. Now we've got like insider ownership, another bias that investors must try and mentally counteract.
Coattail bias.
Coattail bias.
I think that's going to be the name of this episode today. Insider ownership. Did we just create a new bias? I think that's it. All right, dudes, everybody.
Hey, let's call it the Tobin bias.
The Tobin bias. There you go, Mark. There you go. You write that article, write that book. All right, guys. Let's go around. Please let everybody know where they can go and find more information about you, follow you on Twitter or any kind of social media. Stephen, let's start with you.
Yeah, Stephen Kiel. You can find me on Twitter, Stephen_Kiel. I've given the spellings previous weeks, so If you don't know it, go back and watch last week's episode. And we just released a quarterly letter through Willow Oak Asset Management that I definitely encourage those to read. We're talking about kind of the long-term future of the business in terms of providing operational support to small and emerging fund managers. I think it might be interesting to some of the viewers and listeners here. So you can find me at willowoakfunds.com and also the fund I run, which is Arquitos.com, Arquitos. Very
good. Mark?
Yeah, probably best place to find me is on Twitter as well at C MicroCaps. That's capital C MicroCaps. Or at I have an investment newsletter that runs on the Substack platform. So just look up Coffee MicroCaps on Substack.
And Jason, close us out.
Okay, well, you can find me at 8track 180 on Twitter. You can find me at MicroCap Club, where I post a lot, or from now and then at least. And if you're not a MicroCap Club member, then you're missing. Suggest you go ahead and try and join.
I agree. I couldn't agree more. Everybody should go and subscribe to MicroCap Club. It is a great resource. So with that, everybody, I just realized that holding my arm like this, it looks like it's kind of floating the whole time, but there's no magic trick. It's just it's a chair. It's, you know, like my hand's not gone. It's a chair. But anyways, thank you all for listening today. I really enjoyed this panel. You can go and follow the Investors Roundtable on our YouTube channel. That's youtube.com/SNNWire. Again, my name is Robert Kraft. You can follow me on Twitter at Bobby K. Kraft, BOBBYKKRAFT. And thank you all. We'll see you next week.
Good seeing you guys.
Thanks, Bobby.
Always a pleasure.